Hello viewers, welcome to Forex Flow weekly analysis for March 9 to 13th. Here on the screen you can see Euro USD. We are looking at the daily chart. So let's start by looking at what was forecasted last week and what is there for us in the coming week. 2 weeks ago I gave signal that the price was going to close a gap here around 107.50 to 108, and that would be the entry to enter into a buy position. And we were saying that the price would go up initially to 110 with extension to 111 to all the way to this orange line that was set here around 111. So the expectation was that the buyers who are entering here around 108, they can hold their position and then wait for the price to go up. If it breaks above this resistance area around 110, then they can extend their profits and wait for the price to go all the way up here to 111, and that's where they can close here buy trades, and that would give them about 300 pips of profit. So that was very accurate forecast. I hope everybody was able to take advantage of this forecast that was given 2 weeks ago, and you have made about 300 pips of profit here. Now what we have seen here with the sudden announcement of the interest rate cut, Federal Reserve announced 0.5% cut in the interest rate, and the news came all of a sudden, and that's when we have seen the spike in this Euro USD pair. Euro went up and then it's been continuously going up since then. So that was not expected last week. However, the traders who were able to manage the news and they extended their profit, congratulations to them. They can extend their profits. If they had entered around 108, 109, they would have made about 300 to 400 pips of profit. However, if you close your trade around here around 111, still I think that was a very profitable trade that was forecasted. But now we are looking at this pair, it's been continuously going up, and looking at the RSI, it looks like that it has reached to 80. So what's there for the coming week? By looking at this candle here, we have seen that there is a lot of profit taking happen here, and the pair went all the way up to 113.50, and then a lot of selling happened and it closed around 112.90. Also, it broke this previous resistance that was here around 111 to 112, and it's been sitting here for a very long time. As you can see, many weeks, every time the price was trying to break above this, it was not able to break above that. But now it has closed above it, and looking at this candle on Friday, we have seen that there is a support around this area. Actually, price dipped down here, but now it's acting as support. Now let's look at the weekly chart. On the weekly chart, you can see the price is going vertically up, and it has broken all these moving averages as well as the past resistance, and now it's heading upward. However, if you look at the RSI, it's going up very rapidly, and it's currently sitting around 60, 65, and it still has the potential to go up all the way to 80 on the weekly. So here what we can say that the price may continue to go up here. This is your high for the week. I'm going to put this orange line here for your reference. So if you see the price is breaking above 113.50, indication that the price will head upward further, and you can enter into a buy trade at that point, and we can expect the price to go up to 114 with extension to 115 in the coming week. However, if you see the price is dipping down, and on the daily chart here you see it's going up here and around this line, and it's not able to break above 113.50 or 113.55. Instead it's making red candle, inverted hammer, or you see a lot of selling pressure come in and a huge red candle is formed. That's where you can take a sell position and wait for the price to go down. RSI is very high around 80, and if you see a red candle is formed here with a lot of selling pressure, then you can easily take a sell position. Initial target would be 112 here. If it breaks below that, then it will go all the way down to 111. So again, a quick recap. If you had entered into a buy trade around 108, 109, and you have not closed your position here, you can extend your profits and lock your profit around 112.50. If you had closed your buy trades around here and you have made profit, then you can look for the sell opportunity and wait for the price to go up here next week. If it's not able to break above this orange line, look for the opportunity to enter into a sell by looking at inverted hammer or huge red candle with selling pressure. And then initial target would be 112 with extension to 111. For buy trades, if it breaks above this orange line, which is currently at 113.55, if you see the price is breaking above this line with strong green candle, then you can enter into a buy trade and wait for the price to go up to 114 with extension to 150. That's for Euro USD. Now we're looking at Pound USD. Here we were saying that this green rectangle was acting as strong support, and that's exactly what we have seen here. The price went down here and then it got bounced, and that's mainly because of the same reason, the Fed announcement of the sudden interest rate cut by 0.5%, and that is sending this pair up. So it has also broken all the moving averages, 20-day, 50-day, and with this green candle we see that the price is closing very bullish here in this rectangle area, which was a resistance in the past, but looks like it's can go further up in the coming week. So if you had taken a buy position around this support when the price was dipping down and you are holding your position, you can extend your profit, lock your profit around 130 level and wait for the price to go further up. If it dips down here and it gets support from this moving average around 50-day or 20-day moving average, then you can wait for the price to bounce back up. If it breaks below that, you can close your position. If it goes further up, then you can extend your profits. However, in the coming week, if you see the price is continuously going down and it close on daily candle below this 50-day moving average, then certainly close your buy trades and wait for the price action in the coming week. It may be very volatile, so you don't want to enter into a buy or sell trade at that time. This is only a buy setup right now, so if you are a holder of buy position, you can extend your profit or you can continue to hold your position. If the price breaks below 50-day moving average, then please do not enter into a sell trade. That can be very risky. That's for Pound USD. Now we're looking at USDCAD. Here again we were saying that the price may jump up to 134 with extension to 134.50, and that's what we have seen here. Exactly around 134.50 the price went up, then there was a lot of selling pressure, and then the price is again going up here. So with the job numbers announcement on Friday, as well as the oil prices, if you look at that, the oil is crashing, so this pair is tied to oil. I've been talking about this in the past, and as the oil price is going down, this pair is going up. We know that this was the previous high, so here we can say that this is now acting as a resistance. So I'm going to put this line here, and if you see the price is not able to break above this 134.40 or 134.50 level, then you can wait for the reversal candle to be formed. You can look for an opportunity to enter into a sell trade if you see a huge inverted hammer or red candle formed here on daily close, and then wait for the price to go down here to these moving averages here, which will act as support, and the pair should go up after that. So this is good setup for day traders as well as for long-term traders who enter into a buy trade. When the price dipped down here, it got support from this 50-day moving average, and since then it's been going up. However, if you see a huge price rejection, selling pressure come in around 134.50, or if the price goes up here around 135 but it closes below this orange line of 134.50, or it closed below this level around 134, then that's a sign that the price will be heading downward, and then you can take your sell position and wait for the price to come down here initially to 133 with extension to 132.50. That's for USDCAD. Now we are looking at gold. Here we were saying that the price had made this huge red candle here last Friday, and our forecast was if the price get bounced here with this 50-day moving average, if it gets support, then you can easily take a buy position. Gold is in high demand nowadays as people are selling a lot of stocks, and they are investing in futures as well as commodities like gold. Oil is also going down, and gold is a safe haven for now, so you see the price has been going up here. Now in the coming week, as you can see, if you are a buyer around this area and you are holding your position, you can continue to hold it. And last time we have seen the price went up here and we were saying if the price is rejected from there, then that's a sign where you can close your buy trades around 1685 or 1700 level. However, in the coming week, if you see the price continues to go up, then you can extend your profit. If there is a reversal candle and the price is heading downward with huge red candle on an inverted hammer, then you can take a sell position, and we will expect the price to go down here initially to this 20-day moving average, and with extension to 50-day. The target would be around 1625 with extension to 1600. Now we're looking at crude oil. Here our forecast was that the price would head downward to $42 to $40 a barrel, and that's exactly what we have seen here. Although it had not reached to this level yet, but that was my forecast, that the price would break below this orange line, which was the previous support of $43.25, and now it closed around $41.28. So I think this was also a very accurate forecast, and if you were a seller in this case, you should have made a lot of profit here. The price is going down, and we see that the RSI is also heading downward. Now there is a lot of selling pressure. There is less demand right now due to overall situation in the world, as well as abundant supply. So unless we hear that there are some production cuts coming by OPEC or other countries, and there is a demand going up, then we don't expect this to go dramatically up. And the price would continue to stay around this area between 40 and 45, or if there is an opportunity like this, the price dips down here, goes up, and then there is huge selling pressure because the price is rejected around this area. So same thing we expect here. Now if the price dips down here to $40 a barrel, I'm going to put this orange line here, and if you see the price is coming down here but it's making a bounce from here, then our target would be around $43 to $45 a barrel, and from there we'll close our buy trades and enter into a sell trade, and this should head downward again. Either it can come down here to $40 again, or it will break below that, and in that case we will expect the price to go down to $35 a barrel. So with that, I'm going to close. Thank you very much for watching. Please do subscribe to my channel and leave your feedback in the comment section.